Welcome to The Explainer. Okay, today we're digging into something pretty wild, something that's happening right now and turning the entire world of finance on its head. And it all comes down to the secret multi-trillion-dollar trade, the one that's been propping up the global economy for decades. Yeah, well, it might be about to completely fall apart.
So let's start with a puzzle, a real head-scratcher that has Wall Street totally stumped. See, for decades, finance is played by certain rules, right? Especially when things go south, during a crisis. But lately, those rules, they've just been thrown out the window.
Okay, here's what I'm talking about. Normally, in a recession, stocks go down, right? So investors run for cover. They pile into super safe government bonds, which makes bond prices go up. They call it the flight to safety. But that's not happening now. Not at all. Instead, both stocks and bonds are tanking at the exact same time. That's not supposed to happen.
And this isn't just, a little weird. In the world of finance, they call this a Six Sigma event. To put that in perspective, it's like the statistical equivalent of getting struck by lightning twice. It's something that's so rare, it basically shouldn't ever happen. So when it does happen, it's a massive red flag that the fundamental plumbing of the whole financial system is broken. And frankly, it's got the experts absolutely terrified.
So, what in the world could cause a crash like this? I mean, a truly once-in-a-lifetime event. Well, the answer isn't where you'd expect. Not in New York, not in London. Turns out the fuse for this whole thing was lit halfway around the world, in Tokyo.
Yeah, the culprit here is something that, honestly, most people have never even heard of. It's this enormous, kind of invisible trade that's been the secret fuel for the global economy for decades. I mean, it's funded everything from tech stocks to real estate, and now it's all gone horribly, horribly wrong.
And when I say enormous, I mean the numbers are just staggering. We're talking about an estimated $20 trillion. Let that sink in. That's almost the size of the entire U.S. economy. For 30 years, this huge river of cash has been flowing silently under the surface. And now, all of a sudden, it's being yanked back home, repatriated, and the consequences are, well, catastrophic.
Okay, so the official name for this whole thing is the yen carry trade. And the idea behind it is actually pretty simple. For decades, interest rates in Japan have been stuck at basically zero. This created a golden opportunity for huge investors all over the world. They could borrow Japanese yen for practically nothing and then turn around and use that free money to buy stuff like US stocks and bonds that paid way, way more.
The whole thing worked like a charm, a simple three-step recipe. Step 1, borrow tons of yen for almost zero interest. Step 2, swap those yen for dollars and buy up assets in the US, like treasury bonds. And step 3, just sit back and pocket the difference. It was the ultimate no-brainer trade. It literally felt like it could never lose.
But you know where this is going. Recently, that free money machine completely shattered. After decades of fighting deflation, Japan suddenly got slammed with inflation. This forced their central bank to do something they hadn't done in forever: jack up interest rates. And just like that, overnight, the cost of borrowing all that yen just exploded. This sure thing, super profitable trade, it got flipped completely upside down. It wasn't just a bad trade anymore, it was mathematically impossible.
Now, this collapse didn't happen all at once. It was more like a series of dominoes falling, one after the other, over just a few months. So let's walk through the timeline and see exactly how a single political promise in Tokyo set off a full-blown global meltdown.
It all kicked off when Japan's government announced this huge new spending plan, which totally spooked the markets, because everyone knew it just meant more debt. Right after that, the Bank of Japan had no choice but to hike interest rates, and hike them aggressively. Then, the Japanese bond market itself just broke. And the final domino to fall? That was when the US basically said, nope, you're on your own.
And this quote right here, this was the final nail in the coffin. When the U.S. Treasury Secretary was asked point blank if the U.S. would step in to help stabilize the yen, his answer was a very clear, very firm, absolutely not. And that single statement was a giant signal to the world that Japan was completely on its own.
So with no help on the way, what could they do? Japanese institutions were trapped. To pay back these loans that were suddenly costing them a fortune, they had to get cash and fast. And that meant frantically selling off their foreign assets. And guess what their biggest foreign holding was? A whopping $1.2 trillion in U.S. Treasury bonds. And this is what triggered a global fire sale. The experts have a name for it: a liquidity flush. Basically, it's a desperate worldwide scramble for cash.
It's that moment of panic where investors are forced to sell everything, even the good stuff, the safe stuff, just to get their hands on dollars.
So here's the absolute key to understanding this whole mess. The world's biggest foreign buyer of U.S. debt suddenly became a desperate seller. This tsunami of selling slams bond prices down. But because they need cash right now, they don't stop there. They sell stocks, they sell gold, they sell anything that isn't nailed down. And that right there is the reason why stocks and bonds are crashing together.
You know, and we saw this exact dynamic play out perfectly in the gold market. It was wild. At first, as the crisis started, everyone did what you'd expect. They ran to the safety of gold. And its price just skyrocketed to this incredible record high, around $5,400 an ounce. But then, just a few days later, it crashed. It plummeted almost 25% in one day. Now, this wasn't because people suddenly hated gold. No, it was because all these big investment funds that were getting hammered by the yen trade were forced to sell the one thing they owned that was actually making money, their gold. They had to sell it to cover their other losses. It was a textbook margin call crash.
Okay, so what does all of this mean for you, for your money? We are in a really critical 90-day window right now, where all this selling is hitting its peak. So let's take a look at the strategy for how to get through this storm.
And really, everything that happens next, it all comes down to one single event, Japan's general election, which is just days away. If the current government hangs on to power, you can bet we're going to see more spending, which means higher bond yields in Japan, which means, you guessed it, even more forced selling of U.S. assets.
So this lays out a pretty clear playbook for the next few months. The thinking is you want to stay away from what's being called the kill zone. That's stuff like regional banks or speculative tech stocks, things that desperately need cheap credit to survive. Instead, the focus shifts to the safe harbors. We're talking real, tangible assets, gold, silver, commodities, things you can't just print more of, and things that tend to hold up when all the paper assets are getting torched.
Look, this whole event, the Great Repatriation, it's exposed some really deep, really scary cracks in the global financial system. Think about it. That massive, hidden pile of debt from the yen carry trade was like a hidden support beam holding things up for decades. And now, it's just gone. The system managed to survive this impossible shock for now. But it leaves us with one final, pretty unsettling question to think about. What happens when the next impossible thing hits?